Dow Industrial's finally snapping its losing streak after 10 days, but just barely. The major averages closing well off the highs of the day. As for bonds, the 10-year yield extending its run higher, now closing in on 4.6%. And joining us now is Julian Emanuel, Evercore ISI, Senior Managing Director of Equity, Derivatives, and Quantitative Strategy. Julian, it's always good to see you. So maybe let's start with the action we are seeing in the bond market right now. You're looking at the benchmark 10-year. It's backed up 4.57, Julian. I'm just curious, in your opinion, how much of a challenge is that, Julian, for the stock market? Does that level represent to you, critical resistance?
So in the near term, the expectation was not before 2 o'clock yesterday afternoon that you were going to go above 450, which was a big stopping point since the post-election environment, and actually where bond yields topped out as Scott Bessent was announced as the candidate for Treasury Secretary. And so that's definitely a surprise. But when you look at it and you think about the history of the bond market over these last several years, yields above 4.5 become at least a temporary headwind, which is what we're seeing, which we think is what we're likely to continue to see. Above 475 becomes something a bit deeper. And if you look at the highs of the cycle, 5%, that's where we think stocks get in trouble. The good news is there are a lot of shorts in the bond market right now. And so we don't necessarily think that you're going to go 475 or 5 before stocks end up stabilizing.
Well, and Julian, and it's great to see you, by the way. Your year-end forecast for next year is 6,800, right? So that if indeed you think that yields getting much higher from here would be more of an obstacle, does that imply you don't think they're going to get much higher? Do you think inflation is going to start to moderate more? And, how does the Fed play into this equation also?
So we don't actually necessarily think that inflation is going to moderate. Look, the Fed told you yesterday that 2.5% was the number. And interesting, because a lot of people say, well, the Fed thinks inflation is higher. They actually think it's higher than the lower they thought previously. And as we know, core PCE is basically looking at sort of 2.8 to 2.9 right now. So that definitely represents a continuation of the lower inflation trajectory. But again, when you think about sort of the dynamics around policy, it's not clear that the combination of tariffs and immigration reform won't backstop inflation further. And frankly, the fact that we're wrangling on the debt ceiling has got to be a cause for concern that the bond vigilantes are watching very closely.
Your year-end target for the S&P 500, Julian, for 2025, what is that target right now? And walk us through how you get there.
So 6,800, and to us, what it is this sort of recognition that on the one hand, volatility is going to be caused by the bond market, and at 25 times where earnings are now, looking ahead sort of a bit more in line with 25, 26, extrapolating out to the end of next year, acknowledges the idea that in an expensive market, bad news is likely to have an outsized reaction, as we've seen in the last couple of days. But on balance, you're going to have very strong earnings growth, think close to 10%. And you're still in this period of time where we've actually seen productivity gains in recent quarters that aren't AI driven, and that AI is likely to help catalyze further in 2025 at the same time that you've had really these long-lasting effects of the monetary stimulus that were put to work to combat the pandemic, very similar to the periods of the 1920s and the 1950s, both of which were decades of above-average share price returns.
Julian, at the same time, what could next year be like? Broadly higher, but I believe you're also looking for an uptick in volatility, right? And you said something interesting in your note, which is you said people should buy stocks when the VIX is high. Explain to us, I guess, first of all, how often do you think the VIX is going to be high? Do you think we're going to get more spikes in the VIX next year? And why should people buy stocks when that happens?
Well, to start, we are in the process of being in one right now. I think it's pretty fair to say that yesterday started something that I think may go down in the history books as Almageddon, as opposed to 2018's Volmageddon. And we've said that we think 2025 will look a lot like 2018. You had several volatility spike episodes, but I go back to the one that we had in August, where the VIX spiked to really a reasonably unprecedented level of 65. And the bottom line was, the reason that was a buying opportunity is because it said absolutely nothing about changing the solid course of the economy's trajectory or the earnings trajectory. And we think you're going to have opportunities like that probably on multiple occasions. And in fact, we do think you're going to get one sometime between now and the inauguration.
Julian, unfortunately, we got to leave it there, but hope to catch up with you again very soon. Happy holidays. Happy New Year.
Happy holidays to you. Thanks.
Thanks.